like I had explained, the launch was a little delayed towards mid or the peak of the season, so we could not get the entire manufacturing bandwidth. But coming season, it's very promising because the initial feedback for the fans which we've launched has been very promising from the customers and the market in general. And our main customer itself also has a very aggressive expansion plan and investment plan, in terms of sales and marketing to increase their market share of ceiling fans as a category, and especially BLDC. So I think there's no constraint with respect to technology or manufacturing experience or capacities. We expect fairly good growth in the BLDC and ceiling fan category in the coming season, starting October or mid-October to November.
Okay. Noted. Just one last question.
May we request you to please rejoin the queue as there are several participants waiting.
No issues. Okay.
Thank you. We have our next question from the line of Manas Thakkar, an individual investor. Please go ahead.
Hello. Thanks for the opportunity. Sir, in last quarter's call, you had given the guidance of around 7.5 to 8% of EBITDA margin to be achieved in financial year 25 maybe. But this time I think you told of around 5.1 to 5.5. So there is a big gap in between. So what was the specific any reason for that?
No, we had mentioned that the EBITDA guidance is going to be 7.5% for 25-26. So maybe there was a communication, miscommunication or communication gap. We still stand by that. That we mentioned that this is a year of transformation with the entire new team coming under led by Praveenji and under him. So 24-25, we are saying EBITDA margins, while improving from 24, will still remain muted and a little bit under pressure. But for 25-26, which is next year, we maintain that we will get back to our historical margins, in which could range anywhere between 7 to 8%. 7.5% median kind of number. I hope that.
Okay. Yeah, okay. Understood. And sir, you have any specific SKU numbers? How many SKU units you have?
How many SKUs? I don't know the exact specific number, but if we look at the company as a whole, it'll be more than 1,000.
Okay. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up questions, we request you to rejoin the queue. We have our next question from the line of Drashti from Thinkwise. Please go ahead.
Hi, sir. So I wanted to understand what is the further development on AC audio motors. I believe we had launched that in March, and we were waiting for initial customer feedback. So have we got any feedback, and what are our internal timelines to start the production in full-fledged for this product?
Yeah. So, hi. We have already started production, and sales are going on as we speak. And our projection for this coming year, that means when air conditioning production starts from, let's say, October, November of the month, we will be projecting a pretty healthy growth in this category. So, and we will be adding multiple customers. So, it's a good addition for us, and this upcoming season for air conditioning, as you know, especially this season, air conditioning has seen a major boom, and we expect similar growth. So fairly healthy numbers for AC audio motor. And like I mentioned in our call, with good response in the AC audio category, we are very bullish in entering the BLDC, IDU and audio category as well. So that is another product, motor category, which we see that should further help us driving the growth of the motor business in the coming year.
Okay. So you mentioned that we've already started production. So how many customers have we added, and how many further customer additions are we expecting in this entire year?
Currently, we have onboarded 3 major customers, and we expect to add another 3 in the coming season.
Understood, sir. That's helpful. And so, on the chimney launch, which we are expecting this year, are we currently working on any prototype from our client? So we already supply motors to Faber. So, is it that we are working on the product development with them, and that's why we are expecting revenue growth to be very strong in FY26? Or, first we'll develop the product and then we'll start the marketing. So how is this going to happen?
If you look at the chimney category overall, India, there has been a lot of localization in terms of manufacturing of chimneys. As India has really increased in the last year and a half since revisions of the import duty, maybe not this budget, but the one before it. So our overall chimney motor numbers have seen a very healthy growth. And with BIS coming in chimneys, there will be further localization of chimney manufacturing in India. So that's a pretty healthy sign for us, in terms of not only for our chimney motor business, but further manufacturing of chimneys in India. We've already worked on few prototypes, which we have shown to our customers. A lot of OEM customers. There are some OEM customers who are presently buying motors from us, who are also interested in buying chimneys from us. We can, because it's a fairly bulky product, there can be substantial savings we can offer to our customers. Let's say, if a customer is based out of West and we say, okay, your North Indian market chimneys can be developed by us. So we are looking at that. And like I said, because of BIS and BIS in this category, a lot of manufacturing will shift from imports from China to the local manufacturing. So it's a very promising category. Currently, we are in the prototype stage in terms of showing the chimneys, and looking forward to launching the product soon.
Understood, sir. So if you could just help me understand that there is already one player, one contract manufacturer in the chimney space. It's quite large.
One large one, and there are numerous small ones.
Correct. So how does this typically work? Is it the design that is given more importance, or is it the price point that we try to compete with the other contract manufacturers? If you could help me understand.
Oh, I mean, India is generally a very price-sensitive market. So, I mean, of course, quality is a must. I mean, in terms of the kind of OEM work we work with, it's a fairly price-sensitive market. So, price is going to be one of the major driving factors. But I'll say it's not the only factor. The quality, the look, feel of the product. Consumers have been used to, a lot of chimneys coming in from China, where the production facilities are fairly advanced. So, the look, feel, finish has to be of what, products which were used coming from China. And at the same time, the quality and price is also very important. What I would like to say in this situation is, if you look at our overall infrastructure, I think we are one of the few companies which is very well suitable to, take the manufacture, to be able to manufacture and market and sell this product, is because we are already the largest chimney motor manufacturer in the country. We have a very good sheet metal manufacturing facility, and we also have the electronics for the control of the chimneys. So I think this gives us, this manufacturing strength gives us the opportunity to not only put out a very high quality product, but at a very attractive price. So I think we are very well suited to take advantage of this boom in the chimney market.
Understood, sir. So, also in the mixer grinder category, now we've seen stabilization for 2 quarters and the demand picking up in this category. So is it that the real estate uptick, which has been happening in the country for like almost 2 years now, is now translating into now people shifting to their homes, and that's why again we are seeing boom in the consumer durable category. So what are your readings on this?
See, the mixer grinder category has been in a bit of a turbulence for the last 2 years after COVID. A lot of new players have come in and a lot of old players are phasing out also. So now the uniqueness what we have is the in-house manufacturing of our motor, which is being supplied to almost 40 to 50 customers. And now with the new models of chimneys we are developing as ODM. New models of mixer grinders, So that we are developing new models as ODM products and placing it in front of our customers. So in the last, let's say, 6 months or so, we have had 2 new ODM mixer grinders which have been picked up by our customers. And now we are working on developing more and more of them, keeping in mind the e-commerce guys, who want to white label their appliances, and especially mixer grinder is, the market size is larger than the other appliances. So going forward, yes, we have to work a bit more on developing the models in a faster pace. And since we are making these mixer grinders for the last 40, 50 years, so we have this unique advantage of, acquiring the customers. One the largest multinational customers is already working with us. They have been buying these models from us, and they are also working on new models which have been given to us to manufacture. The launches was supposed to happen this month, but some teething troubles had come in. So the coming month, maybe August, we'll be doing the pilot mass production for them. So mixer grinder, of course, the churning is there at the brand level, but manufacturing levels, now the market is coming back to pre-COVID levels. So we hope that, yes, we'll be able to, transform this into a much bigger business than what we are in today. Does that answer your question?
Yes, sir. Yes. And if I may just ask my last question.
Sorry to interrupt, ma'am. May we please request you?
Yeah, no problem. Yeah.
Thank you.
Thank you so much.
Ladies and gentlemen, please restrict yourself to 2 questions per participant. We have our next question from the line of Nitin Gandhi from InnoQuest Advisors. Please go ahead.
Yeah, thanks for taking my questions. Regarding the CapEx, what is it yet to be spent? This thing CWIP of almost 13.5 crore, and what will be the
voice is not clear. Can you just speak a little loudly, please?
Sure. Is it clear?
Yes, much better.
Okay. So CapEx spent at quarter 1 is 3.5 crore, and CWIP is 13.5, almost 14 crore, we can say. What is the amount yet to be spent? When are they going in production, and what are likely asset turnover? And what is the existing capacities of peak revenue potential? If you can share, it will be helpful.
Sure. So look, just in terms of CapEx outlook for the year, the outlook on an aggregate basis is in the range of 35 to 40 crores, of which, like you rightly pointed out, 3.5 crores is already spent and put to use, and 13.5 or 14 crore rupees is spent but not put to use, so therefore standing as CWIP. In terms of the asset turnover, if we currently look at our net block, it is approximately in the range of 230 odd crores. And we are looking at a turnover of approximately 1,200 crores for this year. So one can do the math and get to the asset turnover number. Just in terms of the aspirational asset turnover number, we feel that by next year we should be close to 4.5 times. This is on a net basis, please note. So net fixed assets into 4.5 times is the aspiration for next year. Sorry, did I answer your question, or did I miss one point?
Peak revenue potential of existing, and when you say net fixed assets into 4.5, how much is going to get capitalized in this year?
So this year I mentioned, right, in the range of 35 to 40 crores is going to be the total capex. In terms of peak revenue potential from existing plants, barring the vacant plots that we have, the revenue potential is in the range of 1,600 to 1,650 crores.
Now coming to the second question. The first quarter results have been good, almost against 1,050 for the full year, almost from 250 you moved to 290. But still your guidance for the whole year is conservative at 1165 to 1200. Any specific reason? Because last year also you were doing quarter on quarter reasonably stable or better. So what could be the reason for overall guidance for the year a bit lower?
Seasonality that does come in. So, typically, Q1 and Q4 are high performing quarters, if I may use that term. Q2 is also good, but Q3, more often than not, there is, because that is immediately the quarter right after Diwali, right?
Right.
So typically there is some sort of, lull in that season for appliances, fans, and therefore related motor categories also. So just taking into account, seasonality, point one. Point two, a lot of the growth that is coming in from the new products that we are launching. Now, typically when we launch products, any launch takes anywhere between 1 to 2 quarters to kind of ramp up, and then it stabilizes. So say we launch a product in Q1 also, we hit stable revenues for that product category typically in Q3. So 1 to 2 quarters from Q1, right? So given that, a lot of our product launches are coming in only in Q2 and Q3 and Q4 of this year. We mentioned about OFRs, OTGs, kettles, AC ODOs in some sense, so on and so forth. So therefore, it is only prudent to try and give you a picture in terms of being as realistic as we see it. So for this year, the number that we are looking at is in this range, which is approximately a growth, I think, of 12 to 15% over last year. But next year should be much better than this.
Thank you very much, and all the best.
Thank you.
Thank you. The next question is from the line of Pratap Maliwal from Mount Infra Finance. Please go ahead.
Hi, am I audible?
Yes, you are.
Hi, and thanks for taking my question. So we called out that a fan segment, particularly the TPW fans, is ramping up well, and that we're hoping to start, by October and November this year for some customers. Now, in the previous calls also, we had said that we're expecting some customers to start ramping up from Q3 onwards. So have we added some new customers this quarter? Is it the same kind of business that we're expecting the traction from?
As far as TPW is concerned, no. Yes, your question is, have we added another customer where we said that we expect that production to start from October?
Yes, because in previous calls also we had said that Q3 we're expecting a few customers to start from fans. So I just wanted to know, is it the same book of work, or is it a new customer that we've added also?
It's a new customer which will get added on from.
It's a new customer, but it is we are referring to the same customer that we referred to in earlier quarter. So this is more of an update, but it is the same customer who is a top 5 OEM for which tooling is underway, and we expect revenues to flow from Q3 of this year.
Okay, so there's been, so how does this work? They've increased the order size, or what is exactly the progress here?
So the progress is that we had updated that, tooling was underway then. Tooling is almost complete now. We are under some more stages of testing, and we are definitely going to be launching in Q3. Numbers have risen, but the quantum of increase is marginal. So what we had anticipated, the quantum of increase is only marginal.
Understood. And in the lighting segment, sorry if I missed this out, but I believe that you called out that there's been a trend in that there's been a shift from professional lighting to linear lighting. So can you just throw some more light on this? How would this affect us? Does it affect the pricing, or what effect this would have on us?
See, linear lighting is basically, mostly office lighting. You say in earlier, let's say it was mostly dominated by what we call the troffer or 2x2 light fitting, 2 feet by 2 feet, which was more prevalent. Now we see a trend towards these lights, which are linear in the sense, you can join. So maybe you have one straight row of lighting which goes to 8 feet, 12 feet. So they are like 4 feet kind of lights which are joined together, or a single light which becomes 8 feet, or they are round or given some fancy profile. So basically these are all aluminum profiles which are rolled by CNC machines to give interesting new dimensions and shapes. So to make the whole office area and the ceiling design a little interesting. So what we see from these conventional 2x2 kind of light fittings which were common in office, maybe, certain different designs in 2x2, but now the trend is moving more and more towards these fancy lights, which new kinds of shapes and sizes, which these architects or design consultants are giving. Since these are tailor-made or to fit to a particular office locations, the margins and the cost per product is substantially higher than, let's say, a simple 2x2 kind of office light. So what we see is in this category, the top line also going up, and the margins will be considerably better than, a 2x2 kind of product, which is fairly commoditized now. So that's what we are hinting at.
Understood, sir. So just for my understanding, so are we present in this segment? Like in previous calls, we've called out that we are present in, battens, downlighters, things like that. Do we have an offering for this, or this is something new for us?
So this, for us, this will be something new. We are not present in what we call the linear lighting or how it is known. Conventional, that way a conventional industrial batten is also linear straight. We are present there. But how the industry refers to this as linear lighting, we are not present in this category as of now.
Okay. So just going ahead, what kind of growth do we expect in our lighting segment in particular? If there's any kind of color you can give out on there, because, there's a lot of moving variables with pricing and volume, etc. in this segment. Any understanding you can provide?
What I mentioned in my call earlier also, we expect a growth in our lighting business, primarily to come with the new addition of customers which we are looking at, since the exclusivity contract was discussed and renegotiated with Signify. So we expect growth. Of course, by the time we add these new customers, it will take us maybe another month or two, and the revenues will start flowing in maybe from December, January. So we will get, probably for this fiscal year, we may be getting a max of about a quarter. So maybe the bigger impact of this addition of these customers will be in FY26. But we still expect some marginal increment in the lighting business. Difficult right now to quantify exactly what it will be, but I expect the revenues from these new customers to significantly increase our lighting business in the coming fiscal.
So just for clarification,
thanks for sir.
Just for clarification, the linear lighting will probably come in FY26.
Yeah, absolutely. Yeah. Thanks for taking my questions, and best of luck for the time coming ahead. Yeah.
Thank you. We have a follow-up question from the line of Darshil Pandya from Finterest Capital. Please go ahead.
Hello. Hi. Thank you for the opportunity again. Sir, just wanted to understand what is the CapEx that we have spent over the last 2 to 3 years?
Last 2 to 3 years. Last 2 to 3 years would be, if you take a 3-year view, it would be in the vicinity of 100-odd crore rupees.
100-odd crore rupees. Okay. And what are we willing to spend for next 2 years?
Over the course of the next 2 years, we'll be spending an aggregate of anywhere between 70 to 80 crore rupees.
Okay, got it. And the second question would be on the interest cost for this year. If you can just, tell us what were the interest costs and what is the debt position as on date of the company?
We have net cash of 82 crores on our books. This is net of the debt we have. The debt also that we have is more, working capital in nature. There's no long-term. Just in terms of the interest cost, I think the number for the quarter was 1.7 crores. This obviously does not include any interest income. This is just on the... if you look at interest income and interest cost, then there is a net interest income of about 45 or 50 lakh rupees for the quarter.
Okay. All right. That's it. All the best. Thank you so much.
Sure. Thank you. I think also, we can take a maximum of one more question if there is.
Yeah, sir. Okay. We have a last question from the line of Drishti from Thinkwise. Please go ahead.
Hi, sir. So just wanted to ask that you gave a guidance of working capital reducing to 40 days, correct?
That's right.
Yeah. So if you can help us understand how is this 40-day going to come? Because that's a drastic change from 68 days to 40 days in 1 year. So if you could help us understand.
Sure. Praveen ji, can I request you to...
Yeah, sure. Thanks for the question. As I mentioned earlier, it's more related to the operational efficiencies. So looking to the current status, how we operate in the supply chain. So we are working on the inventories, both in raw material and import. We'll be drastically improving the efficiencies in ordering to keeping the buffer inventories. Secondly, we are working with the all vendors to improve the payment cycles. So net to net, the impact will have a better working capital cycle.
Understood. So it will be in inventory and trade payables, right? Both these areas is where we are seeing for a reduction.
Yeah. We have not working on the customer payment cycle currently. We are assuming it to be the same. But to our vendors and the working inventories, it is more of a supply chain efficiency we are working on. We are not reducing anything, but improving the efficiencies and productivity at all ends.
Understood. Thank you so much.
Thanks.
Thank you. Ladies and gentlemen, that would be the last question for today, and I would now like to hand the conference over to the management for closing comments.
Thank you all for joining this call, and wish you all the best and going forward. So I look forward to another call by the end of next quarter. Thank you so much.
Thank you. On behalf of JM Financials, that concludes this conference. Thank you for joining us, and you may now disconnect your line.